Hello.
Hey, good to see you again. So looks like we're already online on X and YouTube, and I hope we will have a lot of active listeners and viewers today and have a lot of questions. So let's start our RWA Day number 2. So welcome everyone, and let me briefly remind you what is the idea of this initiative. So our RWA Day, first of all, filling the gap between projects and investors in terms of transparency and understanding what the actually project tokenized, what investor holds, and like what are the risks, and so many other questions that you want to ask when you do not understand what's going on here. And today we have 3 amazing projects, and also we have our partners from tokenizing industry that will help me with asking questions. And do not forget that everyone can ask questions in comments on X, YouTube, or here in the chat. So let's start with the first project. Camila, please share with us what Spotty does. I know you have a lot of updates. You were on our demo day and now you're on RWA day. So congratulations and you're welcome. Your mic, yeah.
Can you hear me now?
Yeah, we can. And just like one small reminder, we have 2 minutes for short pitch and then 10 minutes of Q&A session where we can cover everything. So let's start.
Perfect. Hello, everybody. I'm here to introduce you to Spotty. We're going to learn about Spotty through our commodity token Scoil. Imagine that you own a barrel of real crude oil, the same oil that powers the world without needing a warehouse or $1 million. That's a Scoil. Scoil is issued by Spotty, a platform that lets you own real commodity as digital token. One Scoil, 1 barrel of real crude oil, is stored in verified facilities in Mexico and Canada. You own it, you can hold it or redeem for physical oil or trade it in the native market. Why is Spotty built to last? Spotty is regulated, verified, and transparent. We build Scoil the right way from day one. You can verify everything. That's how we build trust. What were you looking for? You can join us in 3 ways. We launched Scoil a couple weeks ago, and we are launching also coffee, meat, silver, and coal tokens during Q3 and Q4 of 2026. And we are inviting 3 types of participants: token holders, which is our core audiences, and we can offer 5% discounts on early purchases. We can also do a lock-in rate with 10% of discount based on volumes. And you can acquire, hold, or redeem almost anytime. We're also looking for partners and operators, people that are going to help us to build the infrastructure. They are commodity suppliers, store and custodies, and settlement partners. We're also looking for strategic investors that is going to help us to scale global operations. We are raising about 4 million. Our structure SAFE. We are building custody systems and reserve verification. And you can reach us in several ways. through our platform or our portal or by email. And if I went too fast, we are a Canadian company. We are registered as a FinTrack in Canada. But that's it, just under 2 minutes. Thank you.
Amazing. Thanks for the under 2 minutes. So let's move on Q&A session. I start our 10-minute timer. And Camila, before other people will ask you a question, I want to ask you the one you mentioned, like that Sporty wants to tokenize many commodities. Why did you start with the oil?
It makes sense at the time when there was no war, before the war, and the oil wasn't going to go like, $100 the barrel. It just makes sense. It's just from all the commodities, the one that was more structured and clear, and we have all the documentations. It just makes sense at that point.
Okay,
but Ariel and Shlomo can also pitch in. Normally, Shlomo is the one that Shlomo is the ones that is talking with our
I can
partners.
go there. I can go there. Hello, thank you, Robert, for the question. We start with oil because we knew that was a differentiator from all the tokens that were in the market. We actually have agreements and participation with 9 different commodities, including one of them is oil. So because of that, we started with oil because we see it as an interesting product, and also by the characteristic that it has, that it actually proves the capacity of the product by itself.
Cool. And yeah, we have a lot of our partners today. So Matthew or Robert, maybe you have any questions. I see Matthew, you want to ask something, feel free to do it.
Yes, I have a question about a lot of the documentation that you reference, because when you deal with a real world assets, a lot of that trust is built through verified partners and stakeholders, documentation, storage and whatnot. Could you touch on what what you're looking to facilitate from the real world side that is going to build trust in the token?
Okay, our product is based on our product is based out of an insurance product similar to an option, with the only difference that we actually provide title, or a sort of relationship that can resemble to a title, meaning that in case that body is not longer capable to provide the service, every holder actually can claim directly to the storage facility because everything is registered. Our partners in Mexico and in Canada are duly registered as oil producers, oil distributors, storing facilities, with all this ecological and regulator standards, from from taxes to direct daily operations. So the same kind of documentation that will have somebody that is exporting 100,000 barrels of oil is the same kind of documentation that is going to have a holder of 1 token of oil, including test of the quality of the API of the oil.
And where can that information be accessed? Is that stored on chain? Is it visible through like a portal on your platform?
Ariel?
Information is going to be accessible to the users on the portal. They're going to be capable to see what we have on the production, and see the amount of barrels that are the amount of barrels that are produced and tokenized, and also the regular APIs. Thanks by regulation, need to have a current analysis of what is the content of the barrel and the quality of the oil. So all the information is clear and transparent for the user from day one.
Okay, thanks. Any other questions, guys? Yes, Fehmi, please.
Yeah. So once those assets are tokenized and those tokens are deployed on chain, um, is there a secondary market for those? Is there any kind of liquidity moving around, or how liquid are those tokenized assets?
Okay, the tokens, we have three layers of the system. One layer is that we generate our own liquidity uh, by creating a system of treasury inside the token that prevent that when it's liquid, there's extra volatility in the market, we can liquidate the token. Also, the tokens are redeemable by nature. So that is something that it comes to part. The other part is that inside our infrastructure, we have a trade desk for oil that will be in charge of making the liquidations to make it faster and then make accessible the liquidation directly to the holder. So we see that any liquidation is going to be quite fast. The redemption also is going to be working with swaps in order to reduce the cost of distribution too. So we have evaluated this in a most cost-effective way for the user in a liquidation part, liquidity, and distribution.
Just to complete this part, in the case for some of the commodities, that's gonna be more for retail, like coal. For the coal, you are chasing partners to sell like quality coals, limited quantities, and those will be on Solana and available for OpenDex.
Amazing. Thanks for this clear answer. Robert, I see you want to ask something. Let's go.
Yep. Thank you for your presentation, guys. Quick question. So at what potential AUM in barrels or in dollars, like would your unit economics make sense? Because I assume you'd have some fixed costs for the storage, right? So basically, at what potential tokenized volume would you see this reasonable to basically to launch?
Well, we have our actual capacity in total for issuing is about 60 million barrels of oil at this moment, and that what we reported to Mexican authorities regarding to the our current storage. Uh, the advantage is that actually we own most of the facilities for, so is cost effective and is run parallel to current oil distribution activities. So let's say we are not exactly needing the transaction, is just a different stream of revenue.
Okay, thank you.
And one more question from my side, as we have some time. What is the benefit for token holder to buy it? So first of all, you provide discount right now for early token holders, but we see a lot of different opportunities in the space right now with additional income, leverage opportunities. What's working on your side right now, and what are your like roadmap in the nearest future?
Okay, the product originally was created for insurance market. So our intention is that the product will be running inside insurance portfolio, so can run for any retail investor. I think that any retail investor that have the intention and the capacity to get a 5% discount or a 10% discount, depending of their capacity in order to operate the purchase, is something interesting. The other thing is that because it's an insurance, it's designed as an insurance product. When enters into a portfolio of any kind of self-managed insurance, user can even use it as a leverage for their actual portfolio, knowing that is into inflation, uh, inflation resilient product. And although that we see the current volatility on the market, the tendency of the oil is quite protected. So uh, and is designed for a long-term portfolio. So it's quite an interesting alternative. If the actually buyer wants to come to to use it for trading or for even stocking, a large buyer can actually secure their current oil storage, or in for a company that is into some kind affected by the price of oil, can transfer to their budget actual stock proven and put it into their books and preserve the price of the oil and then convert it on the sale, making also the current equations related of the amount of oil that can come out from the kind of fuel that come out from a barrel. So there are several model of use for the product, but and that is the versatility of it.
Okay, yeah, thanks for your clear answer. And the time is over, so thanks, guys, for the presentation. And just like a little reminder, if you don't hear answers of questions you have, guys, you can freely reach like X page of Spotty and drop the questions, or use email and other information like other portals and contacts that guys shared with you today. So thanks, and we
Thank
move
you.
on. Yeah, thank you. So
Thank
the
you for
next,
the opportunity.
yeah, the next speaker is Fimi from WES1. So WES1 building institutional grade capital markets on the XRP ledger, which is not like so fast and first like remind when you think about RWA space. So let us know what you do and why XRP ledger.
All right, thanks for having us. I hope that you guys see my screen that I shared. I'll start by answering your question because it's a very interesting one, and a lot of people are asking that same question. We do come from the EVM world initially. We've been building for the past like 5 years, mainly infrastructure and SDKs and that kind of stuff. The reason why we decided to build VS1 on XRPL is because of compliance. TradFi has a lot of compliance obligations, and XRPL built this protocol, like, or these type of tokens called MPTs. They're really not like ERC20 tokens, for example, where everything is permissionless, decentralized, and all like the ethos of crypto. The XRPL MPTs are very different because they allow you to be permissioned, which means not everyone can hold these. They allow you to do operations like freeze, callback, those kind of things that are fully required by banks and financial institutions in real life. So MPTs kind of allow these TradFi players to really tap into the blockchain with all the bells and whistles of what the regulators are asking for. So if some funds are tainted or coming from like money laundering or terrorists or whatever, it's very easy to freeze, to call back, to do operations that are not possible on a like a normal blockchain like ETH, for example. So that's why we decided to go with XRPL, and we have full support from Ripple, and we are on Actually, we're the first protocol that will be deploying their new primitives, XLS 65 and 66, which are single asset vaults and lending on borrowing. So beside that technical conversation, what is VS1? We actually were a tokenization platform. We will start with corporate bonds because that's a little bit underserved. And we're also doing it in an underserved market. We're starting in Central Asia. First product will be in Georgia, but we're already in talks with other issuers in Kazakhstan, in Armenia, and Turkey, and UAE. We are already approved by the Central Bank of Georgia. We have $300 million of pipeline ready to be issued. And the first issuance will be a bond that you'll see a little bit more details in 2 slides, ready for the next few weeks. So the way we
2 minutes are over, so let's continue this on Q&A
I'll
session.
go. Okay, so it was 20 seconds. Anyway, so the way we do it is different. We don't need to be compliant. We offer the technology to compliant partners, mainly the brokerage partners that you see on the right side in here. And we actually tokenize products from these other partners, from real estate bonds, corporate green bonds, or financial institution bonds. The way we like the first product, as I said, is the RICO credit. It's going to be 15 million total, maturity 2 years, around 7-8% yield, and the coupon is distributed monthly. So we're doing that with Foresight, one of the brokers that has a license in Georgia. So that's mainly how we're approaching it. We're offering the technology to licensed brokers in many different jurisdictions, if I can maybe summarize it that way. The rest is pretty much like how much we make and whatever we take. We're around like 1% issuance fees plus some fees if we do lending and borrowing on top of the tokenized assets that we deploy on XRPL. So I don't want to waste too much time. We are already there. We are approved by the central bank. We're waiting for the votes on XLS 65 and 66 on XRPL to deploy the first product, which is due for Q3 this year. And we're looking to find more partners on the distribution side of things, obviously, because we want to have real utility for those tokens in like lending and borrowing, but also if you borrow against them, you should be able to deploy them into DeFi. So I'm going to stop babbling here because I guess that there will be questions coming from the group here. And sorry for taking too much time.
Yeah, and Matthew has the first question, so let's start with it.
Yes. Are these corporate bonds rated? And if so, by who? And if not, do you have plans to integrate with that in the future?
Yeah, so depending on the jurisdiction we operate in, they will be graded by different institutions. And one thing that I did not mention, we're really focusing on growing markets. So we're not competing with like people who are operating in the US or the UK or even Europe, because like that requires a lot of regulations. So the ones that we will be offering to the market will be graded by the first ones will be the Georgian institutions, the National Bank of Georgia.
Okay. Would those ratings be visible on chain? Do you plan on creating that correlation?
Not necessarily on chain. There will be visible on the platform. The platform, by the way, is permissioned, so you need to go through the KYC process. It's not like it's not an open DeFi protocol where anyone can just go and swap and buy a token. Even the DEX is permissioned. So if you did not do the KYC, you cannot do the swap on the DEX. So everything is really kind of super regulated. What we're doing here is we're not making DeFi like of TradFi things. We're offering blockchain components for efficiency, for tokenization, for like maybe less fees and more transparency to people who are already doing that in real life.
Cool. And yeah, thanks for this. I see Anton has questions. Let's start with it.
Hi guys. First of all, thank you for your presentation. My question will be related towards risks. And in that case, what risks for users can you identify on your side and on the side of your partners?
Yes, very good question. there's always risk in any investment we do. There's no investment with zero risk, obviously. In our case, there's very little, which I on-chain risk, because we don't use smart contracts, so nobody can exploit anything. And even the vaults that we have, when people deposit funds into the vaults, once we actually activate the product or the asset, all the funds in the vaults are actually exited to real life, because we need to use those funds to buy the actual RWA, and then we issue the tokenized MPTs in exchange. So the real risk moves outside of the blockchain realm to real life, which means that obviously corporate bonds are protected and they're issued like by super regulated organizations and that kind of stuff. But any company has risks and any product has risks associated to them. So the idea here is, when we ask people to do their own research, they need to do their research on the TradFi company tokenizing their assets, and to see, have they been doing this for how long, are they trustworthy? How big are they? What kind of licenses do they have? What kind of other products do they also distribute? Kind of volume. So that's the kind of things that people will need to be looking at. We will expose all of that information in our platform, but we also invite people to do their own research and not just trust the information that we are sharing, because obviously, like when you invest your own money, so you should also be doing your own research.
Cool. And we have two questions from our X community. So first, who's actually responsible if the bond issuer defaults? We as one or someone else?
Very good question again. So if there's a default, there's a full process. First, we do have insurance on the vaults. So if the insurance covers, that's best case scenario. Who is responsible if the default happens? It's technically the broker. So we offer technologies to licensed brokers. So it's them using our technology. So they are the ones who are licensed, and they are the ones who are responsible. And I'll even double click in there. If there's any default and we need to kind of rebalance the funds and the ownership of the tokens that are still in the vault, it's the broker as well that does all those operations. So we offer the technology to the broker, and they can actually do the operation. So it's not a smart contract at all. It's really operations done by employees at financial institutions.
Amazing. And the second question, for which countries the product is available? And is there any QIC?
The tokens will be coming from, as I said, like Central Asia, Middle East, growing markets. But once the MPTs are issued, they will be available globally, as long as you do your KYC and you're accepted by the broker. So it's the broker who holds the gates to their assets. We will have multiple brokers, multiple products on the platform. So each broker will have their own rules. And in all cases, you need to be KYC'd. Even if you hold the token as a KYC'd customer, you can only sell it to the DEX to another KYC'd customer. So that's how it works.
Okay, thanks. Yes, Shlomo, please.
So you were saying that in case of the company if the company go bankrupt, the broker is responsible. That's kind of unlikely. Brokers don't take that kind of responsibility at all.
It's not exactly what I said. If we are looking for like legal responsibility, since the broker is issuing those tokenized assets, they are responsible of handling the default process. So technically, if there are defaults, obviously sometimes that are complete, like companies that go under. So that is something that is really unlikely, because we do a lot of due diligence before we authorize a product to go on the platform. It's not anybody that can say, hey, I have an RWA product that I want to tokenize. There's a lot of discussions that happen, and you need to also be licensed and need to be operating for more than 10 years, I think, in your jurisdiction before we authorize you. And to better answer your question, So it's the broker that is responsible of executing the liquidation process if a default happens. And that process is defined in advance. So before you buy any asset, you should read about like all the the rules and restrictions of what happens in case of default. And each broker will have their own rules there.
Okay, thank you.
Yes, Anton, please.
Yes, and the second question from me is your product will be available for any type of investor? I mean, private, professional, non-professional?
Yeah.
The other types.
Our platform is available for all types of potential investors, but not all products will be open to everyone. As I mentioned a little bit earlier, it's the broker that decides the rules. So some products will be available to everyone that is already KYC'd on the platform. Some others will be close to a certain jurisdiction, for example. So it's going to depend on the asset itself. The first one will be available globally, given that you do the KYC process, obviously.
Okay, thanks. And as usual, like if you have any other question, you can like for those people who are here in the conference, you can ask them in chat, and Fimi can reply you directly. For everyone else, feel free to drop them on X under this translation or YouTube or directly on VS1 page. So thanks, Fimi. Was great presentation and great product, and we can move on. So the next and last for today project is Total Finance. So the product itself is here for a while, which is crazy. So Steven, please tell us about the project, about your story, and what you built on the space. Let's go.
Hi.
Yeah, now it's okay.
Can you see the screen?
Yeah, we can.
Okay, great. So basically, global commodity markets, they move $25 trillion a year. Still paper-based, still settling in 5 to 30 days. Total Finance replaces that with asset-backed digital tokens, instant settlement, transparent ownership, and transferable anywhere. And we are not a concept, as you mentioned. We started back since 2023 by tokenizing. So we've been live since 2023, started with diamonds, and our B2C marketplace expanded into other commodities, gold, silver, platinum, and sapphires as well. Yeah. So now the big one. Trillion in metal sits in the ground, waiting 10 to 20 years to be extracted. Billions of dollars in capital before anyone can touch it. So invisible to the markets that would fund it. We make that reserve in the ground investable as of day one, and basically also a redeemable claim for a future production. So we are starting with copper, the world's first institutional copper token. Why copper? Copper is in big need, in big demand today, thanks to global electrification, AI data centers, defense industries, and so on. We've signed an in-principle term sheet with a listed miner out of Canada with a deposit in Argentina. And basically, the idea is to tokenize in-ground assets, 10 to 15% of the in-ground assets that is laying there, which occurs at price of today over $5 to $6 billion. Okay. I add 10 seconds, if I may, just 10 seconds. So the project scales as well. So we just were selected with the Cardano Foundation hand in hand to tokenize a BESS, so battery energy storage system. In Germany, it's a project of 500 million euros that will be tokenized. And we are here to do that on the Lava network, with the Lava network, and with that particular German project. So that's it. You can. I'll put the contact slide here.
Yeah, let's keep it here. Thanks. So
Thank you.
let's start with the question part. Who would like to be the first here? Not yet? Okay, but let me start then. Okay, please feel free.
Okay, I see several issues there, and I'm going to a little bit you're talking about copper in Argentina, but most of the copper reserves in Argentina are in the Catamarca and Rioja region that are quite famous for not respecting their contracts with the actual holders. And I can talk that by my personal experience. And second, most of the tokenizations that have been happening in Argentina related to minerals have been banned by the Securities Commission of Argentina. How you deal with that?
Fair question, and I really appreciate your concern. It's very nice of you, and thanks for the question. So first of all, we are partnering with a New York Stock Exchange listed company. So the players we're talking to are not the small warehouses you were citing in your project. So that's one thing. Number two, it's not the only project we are busy with. So we are busy with that deposit in Argentina, hopefully come to production in 2030. But at the same time, we are also busy in Chile with 2 to 3 different deposits. You know, the copper belt between Argentina and Chile is where the most of copper is found today. So what we did, we diversified. Of course, we are aware of political problems, of the SEC problem in Argentina. That's why we turned around and turned to other projects. That's one. But we not only are looking at South America, we are also busy with one of the biggest mining companies, US company, busy in Africa with a large deposit over there. So I think the diversification is key to solutions.
Thanks, Anton. Feel free to ask.
Thank you for your presentation, first of all. And I would like to say that we understand that the future production that can be tokenized by your company and its output is closely tied to infrastructure and capex. So my question is, how do you take this type of information into account when evaluating assets and companies to tokenize? So
Absolutely. So good question. I think in the mining industry, like we said, so the copper mines take between 10 to 16 years to be, first of all, discovered and put into production. Number one, you have different stages of mining companies or mining deposits. First of all, there is the discovery. Then you will engage with third-party companies who will do the geological research or the gemological research into the ground. What is there inside? What's the amount of copper and other metals? Sometimes we have a mix of gold, of silver, and copper as well in different mines. But basically, what we are looking at more advanced mining deposits that are not yet in production, but that are nearly in productions. Maybe the copper mine, in example, in Argentina, will be in production in 2030. Now, this being said, why is it important? It's important for us basically to base our structure on the third-party geological and gemological research. We have for that particular mine, but for the others as well, we have the NI 43101, which is a certificate or a document out of 500 pages explaining exactly what sits inside a mine. And based on that, we can make the evaluation and the building of the token. So for us, it's important to be very close to the production time, 2-3 years before, for example, and then to be able to offer that token to institution to invest in it. And ultimately, what's also important is that the people are able to redeem the asset. Now, how it's going to happen? It's happening in the same way that people are doing it in traditional way. So through warehouses, you get your token, which is kind of a warehouse receipt, and you can exchange basically your warehouse receipt or your token against real material. This being said, we have done this since 2023. So we have built that B2C platform where we are dealing with mines at one hand by purchasing the assets in the mine, and we are delivering to the end user who can redeem the physical asset as well. So for us, we did the difficult technological, legal, and end-to-end logistical part. Now we are applying that to our institutional products.
Thanks, Steven. Thanks, Anton. And we see a lot of new questions here. Yeah, please feel free, Robert. You was the first.
Yep. Thank you, Steven, for the presentation. My question is very simple. So, like you said, you've been live since 2023. I just wonder, was the copper and was the copper tokenization your primarily were you building this from the very beginning, or did you pivot into that from something else? And just in general, what are your success so far in terms of the metrics?
Good question. So no, we started, copper is not yet tokenized. So we started basically with a few hundred diamonds. And the idea of tokenizing diamonds is one of the most complicated assets or commodity to tokenize. Why is that? There's no price discovery for diamonds. There's no oracle. There's no diamond price today. So first of all, it's a complex market, but it means also there's an opportunity. Also, the diamonds basically have much more properties than a gold bar. A gold bar is quoted in 24K, 18K, 12K, or whatever. And that's the only, so in the fineness of the product. For diamonds, basically, you have the 4 Cs, the carat, the color, the clarity, the cuts, etc., and other parameters, which makes it more complex. So we started with diamonds. We started doing it on Ethereum. We expanded the diamonds, because you asked for metrics, to different blockchains. By the way, I heard about XRP. We were the first RWA project on XRP. So the first ever, we did it with XRP Cafe, which is their NFT marketplace, where we tokenized a bunch of diamonds. We had a great success rate. We sold out in less than 24 hours. Same thing for Solana, same thing for Polygon, and we are now also hand in hand working with Cardano to expand our offerings. So diamonds first, we did gold bars. So we have gold bars, silver bars, platinum, sapphires. That's for the B2C marketplace. And we are now expanding with this institutional offering of in-ground assets, looking at copper. And now, as mentioned, we are now busy with the energy project, because basically the idea of tokenizing those kind of assets in order to create new rails for financing can be applied in an in-ground tokenization, or in-ground mine, that can be applied to an energy storage facility as well.
Okay, thanks for the context. Shlomo, once additional question. Your microphone is off, so please turn it on.
Yes, you were mentioning that you are working over ANI 43101 standards. That is what is used mostly for working in the Toronto Exchange for mining. Why you're not a security?
So first of all, good question. That one is more precise than your first one, I think, and more interesting. But we are not a security, first of all, because we are fully backed asset by a real asset. That's one. Number two, we are in talks with the CFTC, who basically define us not as a financial product, but as a token backed by a real asset. So that's the answer for now. So we don't need these prospectus to somehow initiate into securities, which is a great advantage, I think.
You are a commodity deed somehow.
Yeah, ultimately, yeah,
But
commodity deed, yeah.
But you're a commodity deed for unextracted product?
For both, for unextracted, unrefined products, and then the refined product can be redeemable as well.
No, but the non-refined is a problem. That's not a legal problem of a warrant, that you can have raw material and that's not a problem. But when you have unextracted product, and actually mining concessions, most of the planet are actually, everything underground is property of the government, and licenses for the minerals are just a precarious licensing for the product. uh, if you don't have that control in the contract and say, okay, you have X amount of tons that are yours and you have it already covered because possibly you pay the taxes in advance over it, I think that is the only possible way that you can save yourself of that, because they will have to refund you the money of the taxes for the extraction. Uh, you you cannot warrant something that is not extracted and cannot become a deed neither.
Happy to take that question further in a one-on-one if you want, and we can discuss it if you have real interest into that. But just maybe to finalize, yeah, we have sorted it out, so we are in these talks with the CFTC, and it looks quite good. You know, we just maybe to finish on that, we have done our hard work back then when we installed the company, when we started the company back in 2023 in Liechtenstein, where they have like the most advanced blockchain acts worldwide. And I think we broke our heads and teeth already over there for the last 3 years. I think we are quite advanced in the legal way of like approaching the project, but happy to have a discussion on that whenever you want.
43101 is a Canadian regulation and only works on Canadian commodities.
We know.
So your opinion have to be according to Canadian standards, cannot be according to Liechtenstein.
No, about the certificate,
or
of
neither
course, this we know.
CFTC.
Guys,
We need to go to the Ontario Securities.
Yeah, I think we are a bit over the time, but anyway, the discussion is so great that I think we should continue it in, let's say, AMA format tomorrow or next week. I will invite you and let's discuss. This is like comparison of two different approaches. I love it.
With pleasure.
And yeah, thanks everyone for today. It was really great discussion, and like we have a strong range of different approaches across RWA. Like we start from commodity-backed structures and even touch fixed income infrastructure, which I also love. So appreciate all the speakers and all the questions today, and look forward to continue our conversation after this session. And yeah, with everyone, with every project, I'd love to have one-to-one, or maybe like if you want to ask someone to join us the discussion, let's do it and make it happen next week. So thanks everyone. It was great to have you all today, and yeah, have a great the rest of the day, and thanks everyone for watching us today. Bye bye.